Great, Joel. Great. Thanks, Greg. Sorry. Great. So yeah, thank you everybody for joining this morning. We're pleased to have both Joel Solomon and Morgan Simon with us this morning, or this afternoon, probably in Morgan's case. Morgan's in Brazil for everyone, so depending on audio quality, you may not see Morgan's smiling face throughout the entire call, but the audio hopefully will continue to work. So I'm Richard Muller. I'm the Managing Director for Toniic in North America. I just want to welcome everybody to the call this morning through our two great members, Joel and Morgan, who we are pleased to have this morning. Just a very quick introduction on both. Joel is co-founder and chair of Renewal Funds, Canada's largest mission venture capital firm, investing in organics and envirotech. And with founder and funder Carol Newell, Joel spent 14 years implementing what he describes as a portfolio to mission strategy as leader of her family office. As president and CEO of Carol's Renewal Partners Seed Capital Fund, Joel has placed over $10 million into dozens of values-driven companies in BC and throughout their networks across the continent. So welcome, Joel. And Morgan Simon has spent the last decade building bridges between finance and social justice. She was instrumental in the founding of 3 leading organizations in the field. She's co-founder of Toniic, a global network of impact investors, where she also served as founding CEO for 3 years, co-founder and chair of Transform Finance, a nonprofit organization raising awareness about social justice issues within the impact investing sector, and the founding executive director of the Responsible Endowments Coalition, which provides social investment education to over 100 colleges and universities across the country. Welcome, Morgan. So perhaps I could just get each of you to start with a little bit about yourselves for those of us who are on the call this morning, a little bit of your background, or what can you share that puts some of the other comments that will follow into context. Joel, maybe we'll just start with you.
All right. So I was born in Tennessee. I moved to Canada, Vancouver area, midlife. I'm in my 60s. I describe the kind of work that I do as social change investing. That's a term that I'm getting more comfortable with. I did have the opportunity to become an angel investor early on, was part of networks like Social Venture Network, Investors Circle, and others some decades ago, and have had the pleasure of watching this field grow. The opportunity to manage a family office with an integrated capital approach focused on a region. Those of you that are at Whistler at the conference coming up, I think I'll get a chance to share some of that with you, and maybe with Carol Newell as well. And then about 14 years into that, when we placed that 10 plus million, we decided to see if outside investors would join us in our premise that we could invest and make a market level return rate while going into organics and environmental technologies. We started with a $35 million fund and then a $63 million fund, and we will raise another one early in the year, starting early in the year. This is all made up, it's a couple hundred private investors, families, and boutique wealth managers and charitable foundations. We believe that we are doing well on that return rate, series of exits, and et cetera. And it is part of a larger strategy, which is to help encourage capital to move towards things that will help us have a good future. The premise is we've got a lot of serious challenges, world crisis. We must mobilize a lot more money towards regeneration and solving things.
Thanks, Joel. Morgan, how about you?
It's just such a pleasure to be here. I have to start with that is, and having the founding CEO of Toniic, and in looking at the members on the phone today, how many people, and what an incredible privilege to see has grown and developed. So a huge and bottom line who's been part of continuing this organization and help it thrive. And I'm just so thrilled how vibrant it's been. And it connects back to, I've spent 17 years now in impact investment, which I can say with a straight face, as I started as a college student working on the $400 billion that colleges and universities are investing across the United States. And then went from there to Toniic, and really looking at that moment in time was very much about early stage investing, but as everyone knows, has very much expanded into the 100% approach and kind of thinking more broadly about how we can implement impact. And I think I started to then really think, as we scale impact investment, how do we make sure that the impact innovations scale as quickly as the financial innovations do, and wanted to work more specifically on that problem, and did that through two venues. So one is that I founded, alongside Anero Ben-Ami, Candide Group, which is a registered investment advisor that is supporting a couple of clients that are focused on 100% approaches that really center social justice in their work. Because of that RIA designation, anything I say today is for purely educational purposes and examples, not investment advice like anything else that you hear at Toniic. And my other role in terms of Transform Finance, the nonprofit, is really about helping to organize investors and then also support entrepreneurs who are doing that deep thinking about what impact can look like. So I've had the opportunity to really look at the industry, a lot of different angles, and in the last 5 years, mostly as an investor. And have been really excited about the work we've been able to do.
Great, thank you, Morgan. Maybe I could just continue with you a little bit to ask you, what writing a book is a labor of love as much as anything else. Why the urge to write a book, and why now?
Sure. So one of the things that I imagine is part of what's brought everyone to the table for Toniic is that impact investment is just growing so rapidly and beautifully, right? JP Morgan projected last year, or rather stated, right, in their latest report with Jin, 119 billion in impact investments placed just in 2016, right? So the amount of progress we've made is incredible. At the same time, we're at a moment where practically anything can get called impact if an investor thinks it's impact, right? And I felt this really critical need to start doing not definition setting, because I wouldn't have the hubris to do that, but more to say, are there critical questions that we need to be raising about impact? And are there communities that need to be at the table for those conversations, rather than just investors deciding what impact would be? And at this point, there hasn't been kind of a major popular book on impact investment, introducing people to the field. I fought very hard with the publisher to keep investing in finance my title. It's, real impact, the new economics and social change. People who know what impact investment is obviously know that's a nod to impact investing. It was a way to really try to present impact investing as the next big, as opposed to something that's just about investors, but it's about everybody using their economic power and their opportunity to seize the impact opportunity and the scaling of impact investment.
Great, thank you. Joel, what inspired you? I mean, lots of things inspire you, but what inspired you about the book?
Yeah, well, I've had the privilege to know Morgan since early in her career. Maybe that was early in mine too, but I'm probably a good generation older. And when I turned 60 and realized the kind of privilege and access and exposure that I'd been able to have, and as Morgan mentions, seeing the exponential growth in the field that is happening, but more importantly, the exponential growth that is necessary, realizing that the challenges we face, some have been perhaps solved and helped along by technology and other ingenuities, but we are facing crisis at a level that I don't know if we've ever faced before. Our capacity to do damage has gotten bigger than ever, and we're continuing to push wealth up to those who have the most and putting more pressure on those that have the least. So there are urgencies ecologically, politically, socially, and otherwise. And I felt that it would be a good journey to take on, to attempt to put those thoughts together and share. And the idea was, there are so many people sitting on the edge of this kind of work and thinking about the alignment of values with values, meaning, and purpose with our money. And we need a wave of books, of speakers, of authors, of study groups to really take this to the next level. My book is called The Clean Money Revolution, Reinventing Power, Purpose, and Capitalism. I think Morgan and I move around a similar kind of zone in this field, but with different perspectives and opportunities that we've been involved with. And it's necessary for many voices right now to help open the doors and make it more comfortable, prove out models, take risks so that others will follow more quickly. And this year, I just did a blog for the end of the year where I tried to list books of colleagues that I wanted to share. And I really had trouble getting to the bottom of the list. So there's a lot of thought leadership, influence leadership, and discussion going on that I think will help all of us lift up to the next level of what is 100% mission and what else are we going to do with our money than attempt to make the world better for the future.
Thank you, Joel. Maybe I'll just get you to expand a little bit. I mean, the book to me is essentially a call for reform and reinvention. But, I think for a lot of investors in the traditional sense, the last 30 years, give or take a couple of years, have been pretty financially rewarding. So for the masses of us, what needs to change and what's the risk of not changing the way we invest our money?
Yes. Well, there's a pressure cooker that happens when you've got 7 billion people on the planet going on 10 billion. Many of us on this call were probably around for 3 billion people. We have ecological crisis, political issues of magnitude, and all kinds of challenges that we're not actually solving fully and addressing through typical investing. So I'm taken to saying that the clean money revolution is really about a spiritual evolution where we come to understand more deeply what really it means, our responsibility for what is being done to people and places with our money. We need to go deeper than the first level of being sure that companies are B corporations and cleaning up their waste management and certain practices. And we really have to think about the chances that civilization truly can survive and thrive into the future if we don't radically shift how we see capital and its purpose in society. Part of this has to do with public sector, protecting the commons, who is thinking long-term and looking out for future generations. And that there's still money to be made. I think we all have to choose where we are on that scale. Do we need to make more money? Does it help us feel more validated in the kinds of work we're doing? The clean money revolution or the turning over and reinventing of the economy is a tremendous money-making opportunity. Reinventing, rebuilding the systems and what makes up capitalism and how society is designed from the built environment to energy to how we move around. All of these things present tremendous opportunities. So how far do we want to go into the social justice dimensions of it and push ourselves further for helping wealth distribute better on the planet? How much is our life about accumulating additional wealth? Do we have enough? What are we going to do with it when we have more? And so these questions now we need to look deeply into our soul these days and think about really what our purpose is and what our legacy will be when we're on those last breaths.
Okay, thank you, Joel. Just wanted to remind people, I didn't do this at the outset, I'm sorry, that there is a chat feature to this webinar. Any questions that you have, please enter them there so that we can direct them to both Joel and Morgan at the end. We do have time left for questions, so please use that feature. Sorry, I didn't mention that earlier. Morgan, I want to just turn to you for a minute because you also advocate wholesale reform. You're probably challenging investors really to not accept easy solutions and to avoid repeating the mistakes of the conventional finance world. But how do we get investors to realize their mistakes when in fact many may not share the view that the approach they're taking is in fact wrong?
So I want to add a +1 to what Joel did, and then we'll dive into the depth of that question. What I really appreciated, Joel, and what you said is that there's a point in history where we decided that the purpose of capital was to produce more capital. And I think that that's one of the things that we're fundamentally challenging in communities like Toniic, and really thinking about essentially what's the value that it's creating in the world in so many ways. And that the way that when we think about things like, does impact investment give up market return, it's sort of an assumption of this right of capital in the first place, right? As opposed to what that capital is supposed to be creating for society. So how do we think about the perspective change in terms of what we do better? I think the point necessarily doing, it's funny because that's my publicist actually wanted to take that for Harvard Business Review to have the title impact investment, you're doing it wrong. But I think that's not the point, as much as I think we have a lot of actors really committed to doing good work. I'm being told that it might be a little bit of choppiness. I'm going to go ahead and stop the video and see if that makes it better. I'm going to keep talking and someone can let me know if that made things a little bit better.
Better.
Yeah.
So just to repeat a part of Joel's kind of perspective, that sometimes when we talk about things like giving up return, it's on this, there's sort of the divine right of capital to capital. And the opportunity with Toniic and with impact investment generally is to think differently about capital producing a lot of different types of values in our lives and in other people's lives. So I think it's not about the idea that we're doing it wrong. And I've often been kind of urged, right, by my publicist, by others, to kind of take that tack of impact investment, you're doing it wrong. I think it's an idea of we have bad actors out there. I think we have a lot of really great actors who are trying to do as quickly as and that what happens sometimes is that market conditions allow us to stop at good before we actually get to a point where things can be transformative, right? So it's really thinking about, am I getting to the systemic type of intervention that I'm getting the right voices at the table to make sure that I even know what that might be. And then am I thinking fairly about the distribution return that's happening in the construction of a deal itself? And I'm happy to give examples if helpful.
Joel, do you want to share any thoughts on that?
Well, we thought we could rely on government and a good economic system to take care of things. And it turns out that government gets heavily influenced by concentrated power and wealth, and we can't necessarily just count on that. We thought that making investments and doing them better and thinking about a lot of the factors about how companies operate and that kind of thing would solve things, and it helps. But it's time that we go deeper, and we need to think just beyond investing. We need to use our influence and our success to help support public sector. I think it's timely to point out that the vote of the US Senate this week to do one of the biggest grabs of shifting capital from people with less to people with more, just through tax changes, continues. And so the necessity to be smarter about that with a long-term view. We have the challenge that there's not really, where are the adults who are watching out for everything for us and being sure that when there's 10 billion people and it's another 30 to 50 years down the road, that things are going to function well. We might technologize ourselves through a next phase, but ultimately, why would our money not be the most powerful holy substance, this concentration of embodied labor and energy from the planet? That should be used in the most precious way to make things better and to help the whole. And if we're going to have the privilege to be able to own basically infinite money and infinite wealth, I think it's our responsibility to go very deep into looking at what the meaning of life is, what we're leaving to future generations. And if we start to do that, we're smart. There's a lot of ingenuity. There's obviously the ability to invent all kinds of new things. We just need to factor in something beyond ourselves and beyond the dollar bottom line.
Great. So I think you've both done a great job of articulating why the change. I'd like to turn now to how we can change. And so, Joel, in your book, you encourage readers to think of money and investments in particular as having a purpose beyond self-interest. How, when used for investment, money drives the evolution of all sectors. You conclude that without clean money, no other sectors will change. So for those of us on the call today, what can each of us start to do and start thinking about today to act this way and to kind of be the change as opposed to just understand the need for change?
The first is deep inner reflection and truly consider these questions and topics and who we are and who we want to represent to our own descendants and families and constituencies, et cetera. So I think first is inner exploration. We really need to get a sense of why we're here, who we are, what our values, meaning, and purpose are, and be sure that we're aligned with that and that that's how we live our life, including with our money. We should just determine how much is enough. And if we're comfortable with how much is enough, even that is a privilege that's unbelievable we still get to do, but we do. If we can just determine how much is enough, and then whatever success we have beyond that, we devote it to the common good and to higher purpose, then I think we start to set a tone which others can pick up on, younger people will see and want to do better, and we will set in motion a different direction. Meanwhile, pick any sector of the economy and look at where it could be better. And there's money to be made, there's capital needed, there's investment opportunities. This will only accelerate at this point. And we're going to have also, it's good, we're going to feel pretty good if we were on the vanguard of deploying our power and influence towards things that really matter. And when we sit on those last breaths and think about our legacy, we might find out that we became billionaires of good deeds, or billionaires of love, as I like to say, love of life, love of humanity, love of planet. That is, I think that's a case for satisfaction that goes far deeper than how big is my net worth and how many times did I win?
Mm-hmm. Thank you. So Morgan, I think, yeah, you've got some interesting things to share too in terms of how to, and your book, you actually recommend an approach for breaking out of our complacency about our wealth, and you call that the transform framework. Could you just share with those of us here today what you mean by that, how we can use that framework to be the change that we want to be?
Sure. I'll introduce the transform finance principles, and then I'm happy to talk a bit more generally in terms of some of the steps, some kind of practices that I think it can take to invoke them. So essentially, and I talk in the book, I went through this multi-year process working with a coalition of global activists, Mozambique, Mexico, Egypt, who were getting on biweekly calls with me to kind of work out how we could try to kind of pick up the impact, and landed on 3 principles that we try to use in our investment work at Candide Group, and then that Transform Finance uses in all of its organizing as well. And I guess all the kind of background there, just to put all the pieces together, Transform Finance as a nonprofit does 2 main things. So it has a network of investors that launched in 2014 at the White House, when it was a more hospitable place, that it meets monthly and kind of focuses on practices in the social justice realm of whether getting to know different social issues or looking at specific opportunities. And then we also do trainings for community members, nonprofits, and organizers that don't really know much about impact investment, as activists may even be a bit skeptical of it, or not really excited about engaging with finance, and providing them with an opportunity to learn sort of what impact investment is and how to hold it accountable as it scales. And those trainings have been over 80% people of color over the last 4 years, something we're very proud of, and that's often missing in the space. So just to say the three principles aren't just sort of in a vacuum, but there's an organizing structure around how we work with both investors and community groups to kind of put that into place. So without any further ado, the first is to engage communities in design, governance, and ownership of enterprises. And this was in a response to seeing often communities being treated as the producers or the consumers, but not the protagonists and not the owners. And the way that that really then changes the risk-reward profile of how communities are participating and how appropriate solutions are. The second being to add more value than you extract. And I hope that that's something from a heartfelt perspective that everyone would resonate with, that you always want to be adding more value to the community you're working with, or why would you be there, right? But what we've seen is that some investment structures often kind of stop at what's better without really getting to what's fair. So when we think
we may have lost Morgan temporarily. Morgan, if you can hear us, we've lost your audio. So maybe I'll move on and then we can come back to you if you're able to reconnect. Okay. Joel, one of the things that you've pointed out in the book, and it's obviously getting a lot of publicity, is the estimated, what you shared, is $40 trillion in wealth that millennial investors are expected to inherit in the next 20 years. And many people have written about that. What is still, I think, a really open question is, how do you see that wealth being mobilized, being turned into clean money? And do these millennial investors need to force change on their advisors? And let's introduce the advisors into this conversation. We haven't talked about them yet. Will advisors be part of the change, or are we going to have to drag them into the change in terms of what we're advocating, and especially how that applies to millennials?
Yeah. So millennials are part of what's going on, which is increasing pressure on wealth advisors to produce something, quote, better, something more aligned with my values. And that's been going on for a couple decades. It was small enough in the beginning that it resulted in some reforms, SRI, screening of publicly traded companies, ratings, and attempts to validate different practices, excluding certain investments. That's moved on now towards the impact investing realm, which has more to do with direct investing, and then social enterprise investing, where we're getting very creative and helping solve large problems with creativity and combining different uses of capital. But now, with the inflection point that's coming, we are seeing many major wealth management firms, many boutique firms, developing product and language and ability to serve the new audiences, which are not only millennials, but strongly include millennials. So there are facts, there are figures and studies coming out constantly that I'm sure most of us on this call are seeing, that are, and we're seeing it with most wealth managers. We're seeing an attempt now to meet this market. One thing is that this wave of books, and like Morgan really takes an important position on the more social justice side of it, but there's a wave of books out right now that I think are useful guides for the wealth managers to understand the mindset and the philosophy of what it is that's changing and what they need to deal with. I became 100%er, so to speak, from the beginning, because I grew up in the 60s and I was seeing all kinds of questioning of capitalism and how things were done. And it just seemed logical to me that my money should do the things that I was proud of doing myself. So that was a bit of a struggle in the early days, and it pushed one to private companies for the most part, real estate transactions, things like that. But now we're getting a bigger and bigger field of opportunity. So as millennials come on who have more information and with a few clicks can find out what a company's practices are, as well as the next wave of technological innovation, where they see the world and have differently and have access to tools that I never had. This is combining for a perfect storm that the wise wealth manager is going to get ahead of the curve about and figure out the more difficult part, which is we're still needing to invent the products and put together the opportunities so that people have track records and et cetera, so that investors have the opportunity to make those choices easier. The last decade's been a tough time where if you want to do it, you're kind of having to invent it yourself. And now there's emergence of more and more funds, more interesting funds, all kinds of different financial instruments. So summary is this millennial wave won't be perfect. It will, some of it will be greed-based, there'll be all kinds of things that happen, but it's a different perspective on the world, and the world is changing at an accelerating rate. And even in a lifetime of somebody in my 60s, there's probably dramatic changes just in those, couple decades each, where in the 50s and 60s, we lived in a very, very different mindset. So change is coming. Let's be on board. Let's support it. Let's enjoy it, and let's help it.
Okay. So you referenced that the institutions are starting to respond with product. Lot of more work needs to be done, but there's also been a bit of a backlash to some of the product that it seems self-serving, that the term impact washing gets applied the way greenwashing got applied to a lot of initiatives from the packaged goods people 5-10 years ago. Are you netting out generally positive around the products that you see that are coming onto market by the traditional players, or are you netting not so positive?
Well, my approach to that would be to say, forget the modern and new things. What about the existing ones? They're not, they're complicated, and you can get hustled by anybody anytime. And greenwashing or goodness washing or whatever it is a challenge we've all got to deal with, no matter what kind of investing we do. Are we dealing with honest people who, when things get tough, will actually be fair, or will they be selfish? And what will be the end result of conventional investing? So impact or new wave, or however you want to think about it, of course, is fraught with human beings, and human beings are complicated. And you need good instincts and experience to make your choices about who and where to partner and put your money. There's plenty of good products out there, and they're getting better.
Great. Still waiting for Morgan. So what we wanted to allow a few minutes for, because we are talking about books, is get you to maybe share a short excerpt, a favorite passage or two from the book. Are you able to do that?
Sure.
In the meantime, folks, we've got some questions coming in. Please use that chat box to add any other questions. Unfortunately, with Morgan, we're going to be probably a little bit ahead of time here, so we'll have certainly room for questions if you folks have some to ask.
I hope we get Morgan back.
Yeah, me too.
Richard, signal me if I go on too long.
Okay.
So this is in an early part of the book where I call this subchapter Threading the Business Needle. I had no idea what I would do after my father's estate was sorted. All that time marinating in the salty West Coast air had changed me. My experiences investing in Hollyhock and Stonyfield yogurt had warmed my curiosity about money and business. I knew these two forces dominated the world. They were central drivers of so many problems I'd encountered, from cultural genocide and industrial whaling to corrupt political bureaucracies and gutted environmental legislation. My activist friends were dedicated to highlighting atrocities. Rather than the either or of, quote, business versus do-gooder, I wanted to find a synthesis. I saw many activists make tremendous gains, but ultimately hit brick walls, in part due to inexperience with the mechanics of money, business, and power. For some, there was simply no access. Others saw those worlds as too crass and dirty to engage with. Why did doing good in the world require outright rejection of power, money, and business? I believe that's a big mistake. It limits possibility and it makes well-meaning people vulnerable to attack. The purist can appear arrogant and self-righteous about the concerns of hardworking people supporting their families. This makes them easy to beat politically through simplistic accusations of being job killers or anti-progress. But I could identify with why my friends rejected money and power. I'd been born into the world of money and business, and embracing it felt variously like a compromise, a sacrifice, and a hopeful opportunity. Was I another sellout? How does one maintain integrity, consistency, and authentic contribution while dancing with a devil like modern capitalism? These questions live with me. They should live with all of us, whether we're purists or pragmatists. They're especially important for those transforming entrenched systems from within. Stop there.
Thank you. Appreciate that very much. We have Morgan back. I'm sorry for that, Morgan.
Can you hear me?
I can hear you, yes.
Okay, great. If there is a call-in option available, that would really be a lot better. If that's not, I really apologize for the internet challenge. I moved spaces, so you'll hear some lovely Brazilian music in the background, but the internet network is better.
Okay. Can you maybe pick up where you left off in terms of your framework?
Sure. So I think I was just finishing the third principle of balancing risk and return between investors, entrepreneurs, and communities. And that's actually a matrix that we draw for every investment that we do to make sure that we really understand how different parties are being impacted. So that's kind of three kind of high-level principles where I think the hope and expectation is that they can really apply to any transaction. And then there's some broader practices just in terms of the field that we try to think about and in terms of like what are next steps that Toniic members can do. So one is to really think about how to have your impact education match your financial education. That I know for some Toniic members, investing is relatively new to them generally, and that it's taken a time to go up that learning curve of what's convertible debt and what's an equity investment and what are all these different pieces. And just thinking about the amount of time and energy that you put into learning that side of it, or the 2 years that you took to get an MBA, what's the commensurate impact education that you need, which is more than just this feels good to me, right? But what are the sources that I have access to? So it's really no different than any other diligence process of making sure that you're getting in the pathway of the right people to ask the right questions. So really think about if your investment memo was kind of half and half from an impact and a financial perspective, what would that look like as opposed to impact kind of being a sort of just a paragraph assumption that it's always happening. And the second of that is really working on broadening our networks, right? To make sure that we're in conversation with people who might look different than us, to attend some conferences or events that maybe are outside the impact investment sector, but might be where more of activists of where they're hanging out, working on the different issues that might impact what you're interested in. So it could mean if you're working globally, looking at conferences or the World Social Forum. Domestically, it could be spaces like Facing Race that focuses on racial justice within the US. And sometimes in those spaces, I've gotten the question of, well, you're an investor, why are you here? And it's, well, that's precisely why I'm here, right? To make sure that I'm in the flow of information, to make sure that I'm making the best decisions possible.
Great, great. One thing that we'd love you to share, if you're able to, is to provide a bit of a reading of a passage of the book. Have you got something that you've got handy there?
I do, which is that I figured I would tell a story, which from a reading perspective, you know, hopefully keeps people along. And in general, I really tried every 10 pages in the book to alternate more philosophy with storytelling, because I'm seeing some of the questions in the box is you know, this sounds like a great idea, but what does it actually mean to implement it, right? So I'm actually going to tell a story that helps explain that first design, governance, and ownership. And that gives an example of an investment gone wrong is the first half of the chapter. And then the second half is an impact investing gone right. So I'm only going to tell you the part that went wrong, and then you can leave you on the cliffhanger of how the community later got it right. So without any further, this is chapter 6, kind of the excerpt. I'm going to move a little bit to try to get it a little bit quieter. That's okay. So this is chapter 6, engaging communities. And it's about Transform Finance principle number 1, engaging communities in design, governance, and ownership. So the key factor that inspired this principle was a desire to be accountable to communities we serve through engaged shared leadership. Accountability undergirds social justice principle, that of taking guidance from and following the lead of communities, as well as the notion that with great power comes great responsibility. Implicitly have power in any interaction. This is not to say that all communities have no power, but that money gives investors a specific type of power to make decisions on behalf of others. Decisions may or may not be informed by a true understanding of the needs, desires, cultures, or values of those on whose behalf they're made. So I say a lot more about accountability, but I'm going to skip about 6 pages ahead to get right into the story part. So for a vivid example of what can be right or extremely wrong in an impact investment based on the level of attention paid to accountability and engagement, let's look at 2 very different impact projects attempts in indigenous territories of Oaxaca and Mexico. Both examples underscore the importance of Transform Finance principle number 1. Impact investing gone wrong. One of the challenges of impact investment is that we're required to know just everything about everything to do the job right. Can you hear me okay? One of, which is more environmentally efficient, wind or solar? And what's more effective, household solar or village level microgrids? Is direct trade better than fair trade? Get the answer to one of these questions wrong, you can find yourself very quickly stepping on an impact landmine. I've learned that the best investors don't have to know everything, but they do have to know exactly who to call in each circumstance to ask. Even that can be a challenge, as formulating the right questions requires sufficient background knowledge, and we can wind up overly relying on our investment peers who may or may not have real insight into the on-the-ground dynamics for information. In Oaxaca, Mexico, I received a firsthand look at how terribly things can go wrong when impact investors fail to find the right people and ask the right questions. The experience for my resolve to ensure, no matter how pressed for time we may be fastest investment processes, that we're really thoughtful about who to reach out when assessing projects. So here's the story. Imagining open your inbox to an impact investor's dream, a series of projects forecasting returns in excess of 20% on wind energy in southern Mexico, the largest wind corridor in Latin America, co-funded by a respected development bank, the Mexican government, and a few expert wind companies. The wind companies have signed agreements with the local indigenous authorities, getting the green light to install the turbines. They intend to supply the country with a renewable resource to offset over 1 million tons of carbon while creating hundreds of jobs in poor communities. The amount to be invested is $550 million, and the development bank has done its impact diligence and approved the project. So what's not to like? As the Mexican press and numerous community organizations have reported, plenty. When this project came together in 2012, its decision makers failed to recognize the depth of community opposition. Here's what one local observer had to say about it, as reported in Renewable Energy Mexico. The creation of the wind corridor in the Isthmus of Tehuantepec has become the new conquest, as the indigenous Zapoteco and Iqut communities have been basically evicted from 12,000 hectares through unfair and disadvantageous contracts in order to generate electric energy with their wind and on their land in the benefit of private initiative. On November 5th, 2012, the Assembly of Indigenous Peoples reported that authorities had fired bullets and discharged pepper spray at women, youth, and old people, beating several of those present, including pregnant women. The police detained 9 people, among those 2 women, without giving any information about the charges or where the prisoners would be taken. The Assembly of Indigenous Peoples then issued the following statement: no wind power project on the Tehuantepec Isthmus stopped the intimidation, hostility, and violence generated by the wind power project. Yes, you read that right. The intimidation, hostility, and violence were caused not by terrorists, not by oil companies, but by wind energy companies. And the project was being funded not just by evil, greedy banks, but by impact investors and development banks too. How in the world did this happen? In short, it happened because foreign companies developed projects without thinking through their community engagement strategies or making any attempt to share the financial returns fairly. In this instance, the concept of social investment was undermined and distorted. Investors were likely told they were going to be a major force in spreading renewable energy in Latin America, a seemingly great impact story, but they fell into the trap of letting impact be defined solely by investors and entrepreneurs without consulting the supposed beneficiaries. So I'll stop there, but that hopefully gives you a very vivid example of certainly there's some ways in which you could say that that's an extreme case, that there's not always hostility, intimidation, and violence connected to every project. But God forbid that it's ever connected to an organization like Toniic or anything that I've been involved with generally, right? So I think that's what we need to really be on the lookout for. And I'd invite people, if you check out the other half of chapter 6, you'll get to see the way that the community really turned this around as an opportunity for them.
That's great. Thank you for sharing that, Morgan. One of the questions that comes in, I think, is a nice segue from what she just said. It's someone who's interested in hearing more about the practice of incorporating affected community perspective on what constitutes just impact and thinking of just as in terms of social justice impact. So I think that one's tailor-made for you, given what you just shared.
Sure. So I think one thing, and I'll note, particularly for people who have a philanthropic practice alongside their impact practice, is thinking about even who are the entrepreneurs that often cross our doorsteps. And that typically have had access to greater levels of funding and formal education compared to, for example, this indigenous community in Oaxaca, who at the same time have been organized since 1917 with collective control of their land, have very specific community institutions that function quite well, but don't necessarily know that impact investment exists, right? That it's a resource available to them. So I think there's a level of philanthropic work to help even build those connections for communities to recognize that finance isn't always the thing that causes intimidation, hostility, and violence, right? But that also can be this force for good. But in that traditional adage of nothing about us without us, right? It's really dedicating time and resources to that activity, which I think a lot of entrepreneurs feel like they don't have because it's not considered to be a priority, right? It's not something that investors are consistently asking them or allowing specific funding to support them. So I'd say in general, and I think there's also been questions here on how do you engage managers on these questions. Some of it is just asking the question, right? That in general, when we kind of turn money over and it feels like it's not ours anymore, I feel like there's so many questions. So for example, can impact investment be market rate? Where we as an investment community decided we are going to solve that question, right? And by God, we did it, right? It took close to a decade, but we did it. And I think similarly that if we decided as an industry taking leadership from affected communities is actually something we want to prioritize, we would build the institutions to do that, right? That we would challenge our managers to say, this is something that we want to be integral to the process of impact investment. Let's figure out how to build it together. So I do have some initial ideas on how to do that. But I think part of it is in raising that question consistently enough to make sure that it is one of the priorities for asset managers, for fund managers, and then for the entrepreneurs themselves.
Great, thank you. I'm going to read you one of the things that came in, just because I think it's easier to do that than to try to paraphrase. So there's a push in the high wealth management to focus on outcome-based investing or goal-based investing, building asset allocation from the bottom up, not top down, investing essentially in various tranches that match up better with, for example, family office goals. So the question is from this person, how do we see this can help push towards more investing for more real impact? This seems to be aligned with impact investing, maybe sort of nudging them towards impact as well. Either one of you have a perspective on that?
I mean, I think we certainly both have interesting perspectives in having working with families. So, for instance, I've been working with members of the Pritzker family, with the Libra Foundation, and agree that there's this kind of question around how does asset allocation serve us, and how do we think more about, whether it's trying to prioritize going more direct so that you really know where your money spends the night. And then also just in general, some of the challenges that public markets have had, whether from an impact or a financial perspective for people who have long-term thinking. So I do think it goes a bit back to what Joel was saying before about, in the context of a family, what is the intended purpose of your money? And is that about legacy? Is that being a billionaire of love? I love that phrase. What are the goals and what are the ways that the asset allocation serves that goal, right? Because ultimately it's a tool towards an end. And I do think from that perspective, if you're looking at that holistic return profile in the context of a family, it does create more space for impact investment. Joel, do you want to jump in on that?
I think you did a great job. Let's get another question.
Okay. Just wanted to make sure that, Morgan, you had a chance to address this. I did ask Joel a little bit about this, but another question came in around people who are encountering a lot of resistance or doubt from their wealth management advisor or their advisory. So how can we as the impact investment community work with them to bring them along? What advice would you give people who are challenged that way?
So, I mean, I'd love to first and foremost channel the wisdom of Lisa Kleisner, my co-founder at Toniic, who I've seen in so many occasions, and particularly talking with women like myself, and then certainly others, but many may have experienced the Lisa moment of it's your money, right? And just sort of keeping that in mind all the time, that it's so easy to feel like, especially for people who may be, whether newer to early stage investing or investing generally, of tossing over to the fence to the financial advisor and then a feeling that we're no longer in control, right? That it's very hard to challenge those people in our lives. And sometimes there may be family perspectives or reasons, historic relationships, right? So I don't want to be flippant at all about the idea that for some people, it's not possible to shift that infrastructure. I will say that we have, seen experiences where people have taken that as perhaps a multi-year ultimately align themselves with the advisors that were going to serve their purpose, right? Who really understood their holistic mission, and we're thinking about it as a multi-generational process. So I think that's always the first step, of making sure that anyone around you is really aligned with that vision you're trying to create. And then the other, I guess, it's so specific institution to institution in terms of what's going to whet their appetite. And I think some of it is taking the small steps we can. So for example, cash, I feel like is often this very forgotten, boring asset where if your financial advisor is pushing back on where you want to keep a CD, it just seems kind of silly, right? That's usually a pretty easy fight to win. And I think the more that you can create positive experiences for that advisor of, okay, I did these couple impact investments and the sky didn't fall in. There's that old adage, no one ever gets fired for buying General Electric. And we need to kind of create the same. No one's going to get fired because you put money in a community bank. It's okay.
Right.
So I think that might be another thing of, it's great that a lot of folks start with direct investments, but looking at what are the asset classes that might actually be a little bit easier, like cash and private debt for a money manager to take on. Great.
Thank you. So we have a few last minutes here. And what I'd like each of you to do, Joel, I'll get you to start first, is share a challenge or a call to action that you'd like to leave the folks on the line with today. When we end in a few minutes, what do you want people to remember? What do you want people to do?
I'm going to pick up on Morgan's comment. It's your money. It's my money. I want my money doing less damage, less destruction, and more regeneration. Let's be billionaires of good deeds. And let's be sure that we leave behind a strong piece where a fair, regenerative economy thrives. The spiritual evolution is about each of us coming to terms with what's inside us and what really matters. Money has to be aligned in the very same way. And I think that will bring us a lot of peace and satisfaction. And beyond that, it's got to happen so that there's a good world for all the future generations.
Thank you, Joel. Morgan, what would you like to leave on? and encourage others to think about?
Sure. I would just encourage people to think, one, as active participants in the industry, how do we scale the impact just as quickly as we scale the financial infrastructure? And what's the type of impact to infrastructure that you need to do that? And who needs to be at the table to do that, right? And that if communities are just treated as beneficiaries and not protagonists, then we're not going to get there. And then I guess the other piece that two pieces I would invite people to think about when you're looking at an investment. It may certainly, and I'd say most cases, make people better off, but does that make it fair, right? So really look through, is it adding more value than it extracts? What are the structural pieces around systemic change that you need to really think about, so that it's not just about getting out of poverty today, but really making sure a couple generations in, right, that we can eradicate poverty and solve the planet and everything else that we need to do. So would just invite people to, whatever you think the impact might be, go one step deeper, right, and see what you find.
Fantastic. Well, I want to remind everyone that we included links to Amazon for both of the books. Encourage everyone to follow up with that, get the rest of the story that Morgan so nicely left us hanging to figure out the rest. And for those of you coming to the Toniic Annual Global Gathering in January, both Joel and Morgan will be there. Bring your books with you. We've got a signing session set. So I just wanted to thank everyone today for taking the time to be with us on a Monday morning, and I'm looking forward to another call with all of you again soon. So again, thank you both, Joel and Morgan, very much for your time today. Appreciate it very much.
Pleasure.
Thank you.
Okay, bye-bye, everybody.
Bye.